Good morning. Well, we're seeing the war come home as CPI on a headline basis comes in up 9 tenths for the month as forecast, and that pushes the year over year to 3.3%. Remember, it was 2.4% in February, so a big jump. The core comes in up 2 tenths on the month. It takes a while for stuff to get into the core, so that's not a surprise, although it's a little lower than anticipated. The CPI core for the year 2.6%. The index for energy, they say, rose 10.9%. Take a guess what gasoline went up? 21.2%. According to the Bureau of Labor Statistic, that accounts for 3/4 of the entire increase here. Index for food unchanged over the month. Food away from home rising just 0.2%. So it is not a bad overall report. Looks like it's driven generally by energy, but it certainly doesn't help the Fed's case at all.
No, it certainly does not. When you look at these March CPI energy prices rise 10.9% month over month. It's the most since 2005. And Danny, what we're seeing right now in the equity markets is a massive spike in S&P 500 futures as well as NASDAQ futures.
Yeah, we're seeing relief. We went from little change up to 0.2%. You also see bond yields come in too. They were all pushing higher. Now it's little change across the curve. The front end of the curve comes in 1.5 basis points. Anne-Marie, it's relief, but not massive relief, because we still have the big risk event this weekend. Yes, you have this in hand, but can you rush into risk right now? Even if CPI isn't as threatening, can you rush into risk with still negotiations to come over the weekend?
Right. This is a Friday, but really this is an extension of the week we're going to have. Tomorrow's all-important meeting is going to be the talks in Islamabad. And just moments ago, we had Vice President J.D. Vance climb up to his plane, and he is going to be heading over to Islamabad. So these talks will be taking place this week, but a lot of people say really just the base case is that they met. That might just be the success, which is why it's going to be interesting what it means for oil prices.
Yeah, and what do we see if these just get extended and we don't get a resolution? You and Mike were talking about the huge addition of gasoline into prices. Gasoline accounted for almost 3/4 of the U.S. CPI rise. Maybe that's something you can look through now, but how does that feed through to consumer behavior? Does that in turn impact what we're willing to spend? What's the bigger threat? Is it inflation? Is it growth?
Yeah, so gasoline, Mike, accounted for almost 3/4 of U.S. CPI, as Danny and you also mentioned. What else are you seeing in this report?
Well, I think one of the biggest things that everybody's been watching for is what happens with shelter prices, because we had been seeing a decline in house prices, but it looks like they've started to go back up again. Owner's equivalent rent up 0.3 and rent overall up 0.3 as shelter costs rise the same. So after a string of months where they were only rising 0.2%, they seem to be going up again. And that's not going to be good news for those looking for a long-term decline in core rates. So that is something to keep in mind as we go forward.
Mike, we already had data in hand from PCE of the prior month this week, which didn't exactly seem like a great starting point. What do you make of the 2 months together, not just this one in isolation? What do the trends look like?
Well, it's a little bit mountain-shaped. We went up in January, down in February, up in the month of March. And that's probably going to be the case, although we are likely to see another continued effect of the war in terms of energy in the April numbers. And then the question is, does it start to show up in things like food prices, because fertilizer has been unavailable and prices have gone way up? Does it start to show up in other areas where it just takes a while to get in there? And that's kind of the issue for overall for what we're going to be seeing going forward, is what kind of effects will the war have? And that is the job for the Fed, to try to separate that out and figure out what the underlying inflation rate is. A couple of other notes to pass on here is we see that new car prices were up only 0.1, and used car prices went down by 0.4. That's a surprise. Wholesale prices have been going up, so we had expected that to rise. Apparel prices look like they were up by a percentage point. So there's a tariff impact. Remember tariffs?